One should never forget that business is not about generating top lines, but it is about bottom lines. We are not in business just to generate sales, we are in business to make profit. And therefore, I love to elaborate as much as possible on the concept of profit. So let's imagine there's a trading company. Let's imagine this person trades in tables. They buy tables for 1,000 rupees each and sell tables for 1,500 each. And during the year, let's imagine they buy 10 tables. Where will the cost of 10 tables appear? Chances are in the profit and loss account on the expenses side, you will find purchases 10,000. If this company manages to sell all 10, then the income will be 15,000 and profit will be 5,000. But this company finds by the end of the year, they were not able to sell all 10, they managed to sell 6 tables. So how much is the income? 9,000. Have they made a profit or a loss? Now chances are some of you will say they made a loss, but others might say, no, I think they made a profit. And I always say, if you look at the accounts presented by me on the screen, it appears you made a loss. But if you apply common sense, your answer will be, how can they make a loss? They buy a table for 1,000, they sell a table for 1,500. Every table sold, they make a profit of 500. If they've sold 6 tables, they should have made a profit of 3,000. Folks, when you find a tussle between an accounting answer and common sense answer, what will you trust? Folks, if there is a conflict between accounting and common sense answer, always trust common sense. Common sense will be right, error must be in accounts. Now, where is the error in accounts? I have always said, folks, spending is not an expense, consumption is an expense. How much money did this company spend on buying the tables? 10,000. But how many tables were consumed? 6,000. That figure on the left of the profit loss account should have been 6,000. But the reason I gave you this example is, now you go, in case you're running your own business or you're working for a company, download your own company's profit loss account and see what appears on the expenses side. Will you find consumption appearing over there, or will you find purchases? Chances are you will find purchases the way I have shown. And a question will cross your mind that, Anil, you've been telling us consumption should be shown over there. How is it our profit loss account shows purchases? Now, to understand that, let's expand the numbers. Let's imagine this company has not bought 10,000 rupees worth of goods, they have bought 10,000 crores worth of goods. Imagine this is the profit loss account of, let's say, a Tata Motors or something like that. How much raw material did they buy during the year? 10,000 crores. In what form did this raw material come in? It must have come in the form of steel and other metal and rubber and oil and paint and nuts and bolts and tires and tubes and upholstery and thousands of items. How much did they buy? 10,000 crores. How much did they consume? 6,000 crores. How do they know they consume 6,000 crores? The accountant will say, are you expecting me to track consumption? Accountant will say, I don't understand consumption. I'll need to be an engineer to understand consumption. Accountant will say, even if I do understand consumption, tracking consumption is a full-time job by itself, then I can't do accounting. I'm now pointing out a practical problem to you. I've always been saying consumption should appear on the expenses side, but now I'm telling you, either due to constraints of qualification or due to constraints of time, the typical accountant will say, don't expect me to track consumption. Understanding the accountant's problem. Accountants are told, okay, you don't understand consumption, don't worry about it. You track purchases. That's easy. Every bill comes to you. You track sales. Equally easy. Every invoice comes to you. Then accountants are told, transfer all purchases to the expenses side, transfer all sales to the income side, but you're going to get a wrong answer. Then accountants are told, if you cannot track consumption for 365 days, can you do us a favor? If you can't track consumption for 365 days, can you at least measure non-consumption on a single day? Folks, what is the measurement of non-consumption called? It is called stock taking, inventory. Every company takes inventory at the end of the year, at least once at the end of the year, more frequently also at times. Why do they take inventory? One of the reasons for that is because accountants are allowed to use the wrong formula to arrive at consumption. What is the wrong formula of consumption? Entire year's purchases minus a single day's Non-consumption by default will give you consumption. Come back to the table example. This accountant goes to the warehouse before closing the P&L. How many tables will he find over there? 4. Hindsight tells him now. How many did I buy? 10. How many did I not consume? 4. Therefore, how many did I consume? 6. Now that he has understood that the figure on the left hand side of the P&L should have been 6,000. So job number 2, do it. Bring it down to 6. How will you do it? Folks, if we were doing arithmetic, it was very simple. 10 minus 4 would be 6. But we are not doing arithmetic. We are doing accounting. Accountancy, as far as possible, does not believe in plus minus. It believes in debits and credits. How much have you debited? 10,000. When you should have debited how much? 6,000. So how do you reduce 10,000 to 6? Answer is, if you have debited 10, now please credit 4. Guys, now if you pick up your profit loss account again, if you find purchases appearing on the left hand side, on the right hand side you will see an entry under a description closing inventory. And non-accountants get foxed. They say, what side of the right side of the P&L, what does it represent? It represents income. They look at the first figure, sales. What is this? Is it income? They say, yes, these are goods sold. And they look at the next figure. What does this represent? They are told these are the goods not sold. And they have a legitimate question. How can you show goods sold as income? And what is not sold, you are also showing as income? And the answer is that closing inventory on the right hand side is not representing income. It is representing a minus from the left. You were supposed to have shown 6,000 on the left, but you showed 10,000 on the left, 4,000 on the right. Net result is left hand side you are showing 6,000. What was your common sense answer of profit? Per table profit is 500, 6 tables sold, profit should be 3,000. Now accounts also tells you it is 3,000. Income total is 13,000, expenses is 10, profit is 3. Now guys, take this example to the next year. Next year this company says we have got 4 tables lying in the warehouse. They said this year we will purchase nothing. And they sell those 4 tables for how much? 6,000. Income of second year 6,000, expense of second year nothing. How much profit have they made second year? Accounting answer is 6,000. Common sense answer still tells you it's 500 per table into 4 tables 2,000. Now what will you trust, common sense or accounting? Always common sense. Where is the error? Guys, that last year's closing inventory should now be shown as an opening inventory. Why is opening inventory appearing on the expenses side? Because you may not have spent anything, but you have consumed. And I have told you consumption is expense, not spending. And therefore the profit of second year will be 2,000. Guys, expand the numbers to thousands of crores. How much was the profit of this company last year? 3,000 crores. But how much is the bank balance of this company last year? How much did they purchase? 10,000 crores. How much did they sell? 9,000 crores. What kind of bank balance do they have? They have a bank balance of negative 1,000 crores and a profit of positive 3,000 crores. What will happen if the profit is 3,000 crores? Employees are waiting for bonuses. Government says 30-40% should come to us as income tax. Shareholders are waiting and expecting dividends. And this company goes hoarse trying to tell everybody, folks, we have profit but we have no money. And nobody believes them. How is it you have profit and you don't have money? As it is, non-accounts, non-finance people assume profit is equal to money. And even if they believe you, who cares? Can you tell employees, I don't have money, can't pay you bonus? There could be a strike. Can you tell the government, I don't have money, I can't pay income tax? Government will say, then sell your infrastructure, sell your buildings, tax you have to pay. Can you tell shareholders, I have no money, I can't pay dividend? In the stock market, your value will collapse. Folks, I am trying to tell you, do you appreciate some companies get into trouble because they don't make profits, and others get into trouble because they make profits, because they knew how to make profit, but they didn't know how to handle cash flow. Once again, I emphasize successful companies stand on 2 pillars. Pillar number 1, ability to generate profit. If your company is making a profit, half the battle is won. Pillar number 2, ability to manage cash flow. But let's continue further. How much did this company buy? 10,000. How much did they sell? 9,000. How much do they have in the warehouse? 4,000. Now you know it is 4,000. I know it is 4,000. This company doesn't know. Till they nominate an accountant. Go to the warehouse and count inventory and tell us how much is there. Now imagine this 4,000 of inventory was lying in 4 warehouses in 4 geographical locations. And the accountant given the job to count inventory, let's imagine, was a relatively new employee, and the person did not know company owns 4 warehouses. The guy was under the impression company owns 2 warehouses. So what's his perception of inventory? 2,000. He makes the P&L. When he comes back, the senior accountant asks him, did you visit the warehouses? He said, yes. How many did you visit? He says, 2. Let's imagine the senior accountant was slightly senior. He thought the company has 3 warehouses. He said, you went to only 2, we've got 3. Once again, perception has changed. And when the chief accountant asked him, did you visit all the 4 warehouses? He said, 4, I thought there were 3. When he finds the 4th warehouse, his perception has changed again. Question I have for all of you, can you please tell me, when do organizations make more profit? When the inventory that they hold on to is less or more? Lower the inventory, higher the profit, or higher the inventory, higher the profit? Chances are your answer will be lower the inventory, higher the profit. So my follow-on question, have you given me an accounting answer or common sense answer? That's a common sense answer. But what does accounts tell you? Folks, when the inventory of this company was 2,000, how much was the profit? 1,000. When the inventory became 3, profit became 2. When the inventory was 4, profit became 3. When did this company make the highest profit? When the inventory was the highest. Lower the inventory, higher the profit, or higher the inventory, higher the profit? It looks like higher the inventory, higher the profit. But that goes against the grain of common sense. And I told you, trust common sense. So where is the error? Folks, never ever look at inventory in isolation. Always look at it in conjunction with purchases. How much did A purchase? 10,000. How much did A not consume? 2,000. So in order to earn 9,000, how much did A consume? 8,000. And therefore the profit is 1,000. To earn the same 9,000, how much did B consume? 7,000. And how much did C consume? 6,000. Answer is C makes the highest profit not because inventory is highest, but because consumption is lowest. But the reason I gave you this example is when unscrupulous people understand that there's a correlation between inventory and profit. What seems to be the correlation? Higher the inventory, higher the profit. When unscrupulous people understand this, they start misusing this understanding to manipulate profits. Folks, do let me know if this topic was of interest to you, and also tell me which other topics you would like me to make videos on. I'll be happy to do so. And in the meantime, keep sending your comments. I really appreciate them.